Welcome, everyone. Thanks for joining us for today's webinar, Reviewing a Client's Income Tax Return. The webinar will last approximately 15 minutes, and at the end, you will be given an opportunity to receive supporting materials by email. You will also be told how you may email questions related to today's content to the presenter. Today's presenter is Linas Sudzius. Linas worked for a Chicago-based insurance company in various roles, including Director of Advanced Sales and as Chief Marketing Officer. He ran and sold a successful estate planning law practice in Franklin, Tennessee. Linas also writes the publication Think About It, founded by life insurance industry guru Steve Limberg, and Linas regularly speaks at industry events. Before I turn the floor over to Linas, we are going to vote on the August webinar. Your choices include nuances of spouse inherited annuities, dealing with missed RMDs, IRS updates 1099 reporting for QCDs. I'm going to launch the poll and give everybody a minute to vote. All right, it looks like the August webinar, we will cover nuances of spouse inherited annuities. Thanks for participating in the poll, and add that one to your calendar. And don't forget that in July, we will cover Case Reveals Risk of Infinite Banking. And with that, I will turn the floor over to Linas.
Welcome, everyone. I'm pleased that you've joined us for today's webinar titled Reviewing a Client's Income Tax Return. Today's session is part of our webinar series. Each of these webinars is open to those in the life insurance and financial services industries and is free of charge. Before we begin, I'd like to remind you that next month's webinar will be held on Wednesday, July 1st at 11 a.m. Central. The topic will be Case Reveals Risk of Infinite Banking. If you know of a financial professional who might be interested in one of our monthly topics, please feel welcome to invite them to join us. This webinar will last approximately 15 minutes, and so let's get started. Before we do get started, let's talk about what's coming up in July. Our webinar will be on July 1st. Our monthly webinar will be on July 1st at our normal time, 11 a.m. Central. The topic will be The Case Reveals Risk of Infinite Banking. If you know of someone that would benefit from joining our webinars, feel welcome to invite them. So we're going to talk about reviewing a client's income tax return, particularly with an eye for financial professionals and life insurance professionals and the information that will be relevant to them to talk to their clients about. Let's start by talking about the proper forms. We'll also talk about the opportunities that exist on the main tax return form. We'll talk specifically about Schedule A, and then we'll talk about some things, some tax questions and planning questions that are actually outside of the form. Let's go ahead and talk first of all about the proper forms. One of the things that may intimidate somebody who hasn't asked for tax returns before is the possibility that somebody is going to file an income tax return that's different from the normal one, the normal Form 1040. There's a Form 1040 SR which is designed for seniors, and that's the one that you see on your screen right now. Here's the interesting thing. There's really no difference between Form 1040 SR and the regular Form 1040. The things that we'll talk about today, the information that we'll talk about today, is on Form 1040 SR as well as on the regular Form 1040. The thing that makes the Form 1040 SR what it is the fact that the font is larger and it's 3 pages instead of 2. So that's the interesting thing. So when we talk about Form 1040, understand that our clients really are filling in the information on 1040 SR in the same way. So let's talk about the main opportunities that I see on the form. And these aren't all of the opportunities. They're just kind of a highlight of some of the information that can be harvested from looking at a client's income tax return. Here's what the front and back of the federal income tax return looks for the United States. One of the first things at the top of the page is the Social Security number. And why is that important? Well, I think it's our cue to tell our clients, to remind our clients that they ought to check about what their Social Security projected retirement benefit is, because that's the deal with the Social Security number. Our clients can get that information online, or they can ask for it to be sent to them in writing from the Social Security Administration. And so if you're doing any kind of retirement planning with the client, having that number, having a reliable number about that is important. Also highlighted the home address field here. Asking the client about their address, I think, is important. It gives you a license to discuss with them whether they've purchased a new home recently, if they've got a mortgage on their home, if they've sold their prior residence, or if they're renting it out, whether they were able to claim the primary residence exclusion. It's also an opportunity to talk to them, if they're a homeowner, about whether they have adequate life insurance protection to cover the mortgage at their home. If we've got somebody who's married filing separately, they really don't have much of an opportunity to make Roth IRA contributions. People are locked out of that at just $10,000 of income if they're married filing separately. So I think you want to understand why they're filing separately, and if they don't have a good reason, then perhaps they ought to file jointly so they can take advantage of some other things, maybe save more in a Roth IRA and maybe save some more money. Digital assets. This is something relatively new on the form. I think if we've got a situation where a client holds any digital assets, I think we have an opportunity to talk to them about them making proper plans for the disposition of those assets if something happens to them, and to encourage them to put information about accessing those digital assets in a reliable place, so that somebody who might be cleaning up after them or trying to take care of them if they're disabled will be able to access the information when the information needs to be accessed. And so that promises to be a fruitful conversation if they do in fact have digital assets. If our clients have children, we'll want to know about that. Obviously, for life insurance planning, a married couple or a single person with children, they generally want to take care of those people if something happens, and it's a reason for them to have adequate amount of life insurance. We've also got an opportunity for college savings if we've got young children, and if we've got a business owner client, we've got some opportunities to perhaps split income between parents and the young children to save some income taxes. So If we've got somebody earning a substantial amount of W-2 income, it's good to know. High income clients tend to have more opportunities for us to be able to help them. One of the reasons that we'll want to know the W-2 income for our clients these days is because clients that have high wages may have to make 401k or 403b contributions in catch-up contributions into the designated Roth portions of their work plans. And so it's another reason to harvest that information. Excuse me. If our clients have IRAs, it's a license to talk to them. It's a license to talk to them about their potential RMD obligations, about whether they've planned adequately for retirement, and if they've done any kind of QCD planning, it lets us know that they have charitable intent. And if they haven't done QCD planning and they're of retirement age, it's an opportunity to talk to them about the advantages of doing QCDs, particularly if they do have charitable intent. If our clients have capital assets that they've sold during the year, we'll want to know that. If it'll give us license to talk to them about perhaps diversifying their asset portfolios and considering tax-deferred assets like cash value life insurance, like non-qualified annuities, if those are appropriate for them. And then the adjusted gross income number at the bottom of the page. At the bottom of the page is an important number for us to know for things like Roth IRA eligibility. So that's the first page of the form. On the back side of the form, we'll want to know whether someone's claiming their standard deduction or whether they're filing Schedule A. We'll talk more specifically about Schedule A in a minute. We'll also be interested if they've entered a value in field 13A. If they've got a qualified business income deduction, that means that they're participating in some way in a pass-through business. We'll want the details about that. Perhaps we don't know that the client has some kind of proprietorship. Perhaps it's an opportunity to talk to them about implementing some kind of qualified plan in the business, maybe a SEP or a simple plan, if that's appropriate. If there's a third-party designee listed on the form, means that the client probably had a professional prepare their income tax return. We'll want to know about the relationship there and whether making direct contact with the accountant might be something the client would be interested in, so that the financial professional and the accountant can work together in the client's best interest. Let's talk a little bit about Schedule A. If our clients itemize, they'll itemize using this form. If they might have significant medical or dental expenses, and if they do, and are able to take an itemized deduction for those, we can certainly talk to them about the nature of those expenses and get some details if some family member, dependent family member, has significant medical problems. It'd be a good thing to know about and perhaps something to protect against. Be a reason to talk about the possibility of long-term care insurance and some of the hybrid products that are available these days. And then we can talk about home mortgage, buying adequate amount of life insurance related to home mortgage. We can also talk about the limits of the home mortgage deduction and whether it might make sense to try to plan to pay down mortgage balances. And we can certainly talk about whether they've got adequate life insurance to cover the mortgages, their mortgage liabilities. If they're charitably inclined, it's important to know. If they've made gifts by cash or other kinds of gifts, it's important to know. We can talk more in a more detailed way about sophisticated ideas for really high income clients, things like charitable remainder trusts. For our more run-of-the-mill clients who are older, we can talk about QCDs. And we can also talk about leveraging gifts to charity through the use of life insurance. What other things might we learn while talking to the clients about their income tax returns that are not necessarily directly on the form? Well, if we've got a high income client with a complex income tax return, that implies a high net worth. We've got an opportunity to talk about estate planning, potential family gifting. We should ask about citizenship for the surviving spouse, make sure that the surviving spouse is a U.S. citizen, make for unlimited marital deduction planning if surviving spouse or a potential surviving spouse is not a U.S. citizen. It's a much more complicated estate planning kind of situation for a high net worth couple. And we've got an opportunity to work with them on those details. If we've got a Schedule C as part of the package or other pass-through business or even a regular C corporation business, if we find out about that, well, then we've got buy-sell planning opportunities, we've got compensation planning opportunities, potentially using financial products to help the client achieve some goals. And then for clients of any income or net worth level, it's worth asking them about their estate planning documents, check on the effectiveness of their beneficiary designations with regard to life insurance, IRAs, annuities, and other financial products. So what are the conclusions that I hope you take away from today's session? First of all, Form 1040 can directly reveal opportunities related to income tax savings, perhaps in the future. Not only what happened in the past, but we can perhaps predict the future and help the client manage their income tax liability in 2026, 2027, and beyond. We can talk to them about investment diversification, and we can find out about their charitable giving profile. The tax form can help us start conversations about financial needs, estate taxes, probate, wealth transfer intentions, and business continuation plans. So all of that is stuff that can be revealed with a discussion about the client's federal income tax return. To wrap this up, I'd like to thank you for joining us today. As a reminder, if you'd like to receive the supporting materials related to the webinar, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's content. Feel welcome to join us for the next webinar on the first Wednesday of next month, July 1st at this same time. Next month's webinar will be titled Case Reveals Risk of Infinite Banking. You can also find an archive of past webinars on our YouTube channel, Advanced Underwriting Consultants. Please subscribe to our channel. It helps us to keep making free webinar content. Today's presentation will be posted on our YouTube channel by the end of this week. Finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again and best wishes for continued success.